Okay, I talked about China, Kimmy K. If you don't know who Scott Galloway is a NYU professor, I think. He has his own podcast. Super smart guy. He's worth hundreds of millions of dollars. He built some tech companies and sold them and whatnot. He can be a jerk like all of us can, but he's super smart and he's sometimes fun to watch and listen to. Uh, let's read what Scott Galloway said. He said this a while ago, but talking about the China, I think actually this particular post is him talking about the Kimmy K, the cheap Chinese AI stuff. Scott Galloway said, just explained why China doesn't need to build better AI than America. It only needs to make American AI worthless, which is essentially what it's doing. I think China is beginning to engage in what we call AI dumping, not competing, dumping. Now, I disagree with Galloway on this. I don't think they're dumping anything. They are basically showing how it doesn't, it's not like they spent billions creating these things like ChatGPT did. They literally, it took them millions of dollars to create some of these programs. And either way, whatever it cost them, it's costing them 10 times less than what it's costing the American companies, because the American companies are just soaking the venture capitalists. It's the term economists use for flooding a foreign market with below cost goods until the domestic industry collapses. Galloway says they're going to have a series of open weight models. About a third of corporations now are supposedly using Chinese lightweight open weight models that are cheaper, not better, cheaper. A third of corporations already. China isn't trying to out-innovate Silicon Valley. It's trying to collapse the economics beneath it. Again, I disagree with Galloway on this because if you have studied or seen what China is doing, I think I talked several market updates ago, a whole bunch of blue chip company CEOs went to China to look at their manufacturing processes and some of their factories, and they came back frightened because they basically said, we're effed. We're screwed, because they saw all of these, what they call dark factories, where there were almost no humans running them. They ran 24 hours a day with all robotics and AI and everything else. And they were just pumping out product. Now, if you've ever seen Chinese cars, some of the Chinese car models, or some of the Chinese phones, they're far superior to, in many cases, the ones that we are allowed to buy. We're not allowed to buy many of those because of governments, essentially. So Galloway's trying to make this capitalist case that, China's just taking the loss to screw over the U.S. economy, when the reality is, in many ways, they are out innovating Silicon Valley. He doesn't like to say it because he's part of Silicon Valley. He's made hundreds of millions of dollars off Silicon Valley, and he's an investor in Silicon Valley. So he has a vested interest in making China sound like the villain here. But if you aren't biased and you don't really care, you can see more clearly. And I don't really care. So I can see much more clearly that in many cases, China is way, way, way out innovating the Silicon Valley. So I take issue with what Galloway is saying here. Price warfare at the infrastructure layer. Galloway says, if I were Xi Jinping, I would just dump cheap AI into the US market. This playbook is old. China ran with it with steel, ran with it with solar, ran with it with semiconductors. Flood a market with a cheaper version until the domestic industry can't sustain itself. AI is next. Galloway says the moment large corporations start announcing they're disengaging these multi-million-dollar site licenses with Anthropic or OpenAI, they're using these inexpensive Chinese models. One CFO after another decides the Chinese model at a fraction of the cost is good enough. Yeah, like 100 times less. Not better, good enough. By the way, just had a great conversation with a good friend of mine and yours. You know him. And we were talking about this very thing, that most of the AI we are using, and we're finding this as well in our offices, that the AI we're using and the agents we're building and using are good enough. And that's okay. They're not perfect. They break. They're good at what they do for a while, and then you got to fix them, but they're good enough. 10-80-10, and I'll talk about that. Good enough at a lower price has killed more market leaders than any superior product ever has, Galloway says, and the market realizes that there's no way they can justify these incredible valuations. I think the U.S. market crashes, not because the technology failed, because the business model did. American AI companies are valued on the assumption that corporations will pay premium prices for premium models. China's whole strategy is to make that assumption false. Galloway says 40% of the S&P now is directly or tangentially related to this giant bet America's making on AI. Remember I said a major part of Wall Street and the stock market is propped up by AI. That's essentially what he's saying. The S&P is the S&P 500. 40% of the S&P tied to one sector, AI. Galloway says the majority of GDP growth over the last 2 years has come from AI CapEx, which is capital expenditure, building the data centers and programming the models and all that stuff. The majority of GDP growth from one source, America didn't diversify its future. It concentrated everything into a single bet, then left that bet undefended. By the way, the U.S. has been doing this for 50 plus years. When we started sending our manufacturing to Mexico and to India and to China, that's essentially what we did. We used to manufacture things. We were net exporters of things. Now we're net importers of things. So this didn't happen overnight. This has been happening gradually over decades, where we gave away essentially all our production. The distance between AI boom and American recession is one procurement decision. I think they meant to say one procurement decision away. America built the most advanced AI on earth and forgot to build an economy that survives someone selling it cheaper. Really? Did they forget that? No. The threat to American AI was never that China would build something smarter. It was that China would build something cheaper and American corporations would choose the price. China's real weapon isn't Chinese technology, it's American capitalism. He's right and wrong in the same sentence. Chinese real weapon quite often is their technology, as well as American capitalism. The same rational self-interest that built the AI industry will dismantle it. The moment a cheaper alternative appears, the market has no patriotism, only price sensitivity. The technology race was never the real race. The real race was always whether America could turn its AI dominance into something that survives being undercut. America hasn't even started running it. China already has. All right, we just read that. Let's read some of the comments. It's a false narrative conversation. It's cheaper and better for the average American, and that's important. Their inference value may not be as good, but who cares for the 10%? We need to get over ourselves and start building and not focusing on capitalizing on every step. Again, Galloway's wrong. The U.S. focus is to deduce value from owning the brain, where the Chinese have an industrial strategy of energy, intelligence, and movement, aka electricity, AI, and robotics. In the latter, AI is the commodity complement, supporting value in the other two. AI still obeys the law of supply and demand. Whether it's a US or Chinese model, they all need DCs, power, cooling, networking, and compute. Cheap AI is often subsidized by public or private capital. The infra bill doesn't magically disappear. This is a perfect description of why President Kimi token plans are 10 times more expensive than Claude Max 20X and ChatGPT Pro 20X on a per token basis. That could be. Token economics. Kimi K3. In just one day. So it's saying it uses more tokens to get the same response. Okay, so that could be. That very well could be that some of the cheaper models actually, they're not necessarily cheaper in the long run because they use more tokens to infer or to come up with the same output. So nevertheless, that's something to keep your eyes on because that was a big story this week of how the AI models are really throwing a monkey wrench into the OpenAI and Anthropic's plans to go public and so on and so forth.